Well, Asian markets have sunk as investors brace for a possible Israeli ground invasion into Gaza, fearing the move may spark a regional war involving Iran. Stocks in Tokyo led losses, with the Nikkei 225 down 2.03% and the Topix falling by 1.53%. Hong Kong's Hang Seng index fell 1.15%, while China's benchmark CSI 300 index dropped 1.27%. Meanwhile, the People's Bank of China has left its medium-term lending rate unchanged to 2.5%. The central bank has also injected $108 billion worth of liquidity into the financial system in an effort to support the economy. For more on this, let's bring in Han Tan. He's the chief market analyst at Xfinity. He's speaking to us from Dubai. Han, thanks for speaking to us. Just talk us through how increasing tensions in the Middle East are affecting markets globally.
Yeah, so it's certainly added to the worries for markets who had already a lot to contend with. For example, keeping a close eye on the Fed, which they still are doing. But this conflict only, like I said, only adds to the tensions, right? So, for example, you've got safe haven gold that is now back above $1,900. So moving forward, markets, at least the riskier side of the markets, are of course hoping that the diplomacy efforts can help contain this conflict, preventing it from spilling over into the broader region. But if those efforts fail and we see a protracted conflict and a broader conflict, I think there's bound to be another major sell-off, especially in stocks and other risk assets.
So, Han, oil has retreated after a recent spike, but we still see benchmarks holding above $90 a barrel. What's the current investor sentiment?
Yes, so oil markets are still in this wait and see mode, although they have priced in a lot of this war and geopolitical premium. And so again, the fear is that this could lead to other countries being involved in this conflict, other countries, specifically ones that are major oil producers. So markets are waiting to see how this conflict could actually affect the supply-demand equation for global oil markets, and that would determine whether price could potentially move even higher, or perhaps markets will decide whether or not to unwind some of those premiums that are baked in as we speak.
So markets and investors are also looking ahead to key economic data from China and Japan this week. What are you expecting to come from that?
Yeah, so for China, markets really want to know whether the worst is now behind us. You've got the GDP for third quarter. That's set to come in lower than Q2. Retail sales is also likely slowing, but now with stimulus measures, like you mentioned earlier, being rolled out, especially in the financial system, the question is, will all that put China on a sustained recovery? For Japan, it's still the inflation story. Although inflation is expected to ease somewhat in September, the question is whether inflation is sticky enough for the Bank of Japan to finally hike its benchmark rate, either perhaps later this year or next year. So those are the expectations for the Chinese and Japanese data due this week.